Okay, let's take a look at this one. Okay, is it too small? Can you guys see it? Now, this is as the US president election in November, right? And this is for Harris and this is for Trump. Now, the US election in November is drawing closer, is nearer, right? And Harris and Trump right now are considered neck on neck. Now, making the outcome a little bit more difficult to predict. Doesn't know that who is going to win. But however, you have to understand this, okay? However, market analysts believe that regardless of who winning, the economy will benefit from it. Now, it estimates that both Harris and Trump will increase the budget of shortfall to between 220 billion to the range of 650 billion annually, which will stimulate economic growth. Now, combined with the Federal Reserve expected interest rate cuts, now this should create a risk-friendly environment for the stocks market in 2025. Understand? Now, as this, you can have a look on this one as well. Now, some of the key stimulus proposal from Harris camp, including that extending the 2017 tax cut and also Job Act, and implementing that tax cuts for households earning less than 400,000 per year, and raising the child tax credit to 3,600 per child and 6,000 to newborn, and eliminating the tax on tips. All right. Now, meanwhile, for Trump has also proposed that extending the 2017 TCJA tax cut and increasing the child tax credit to 5,000 per child and eliminating income tax on social security benefits for senior as well as the tax on tips. Understand? I already explained out for all of you. Again up. And also, this chart shows that the economy proposal for both candidates, and it estimates that the impact of federal short fares. Understand? And the market now is waiting for US personal consumption expenditure, the PCE data, to be released on Friday to find clues about the potential size of the Federal Reserve interest rate cuts in September. Understand? The size, okay? Now, if the Friday PCE data strengthen the case of Federal rate cuts, it will boost the market sentiment and have a positive impact on the stocks market. So, in the meantime, it's advisable to avoid technology stocks and focus on performance of utilities sectors. Understand? Now, scholar who understand this, please give me a response by replying understand or yes. Okay? What do you mean by this is this year, right? For the election, yes, it's in November, in the coming November. If you're asking about the election on the US. Well, enough. For now, let's analyze our part B, which is KLCI index surging, and then after that, it pulled back. So why the market trading atmosphere is so dull if funds taking a defensive stance right now? Okay, today, as you can see, today the KLCI index hit a new high at first here, hit a new high at first, and then after that, it quickly adjusts. And as I mentioned last night, there is a risk of a pullback following the recent rise. I have mentioned to all of you, right? So over the night, US stocks fluctuated and crossed lower, which influenced a 1.29% drop in Malaysia stocks market today, right? As you can see. Now, from a technical perspective, the recent support level for the index is around 1,634. Here, this is the support level, all right? And for, okay, miss out a S here, okay? It's a support level. Now, and for the resistance is at approximately 1,695. This is for the resistance, okay? Somewhere over here. Now, it is expected that tomorrow might see tomorrow then is still going down. Now means that it's in terms of short terms, capital is focusing on defensive strategy and paying attention to defensive sectors such as like just now I mentioned already utility sectors. So right now pay attention to utility sectors and watching for potential stabilization opportunities in construction stocks. All right? Okay, now, in terms of sectors and individual stocks, as you can see, construction stocks fell sharply by 4.28%. Right here, I already marked the figure, now causing the index to decline rapidly. So the financial service sectors here, which led the gain yesterday, it also fell today by 1.75%. So stocks continue to experience more decline than gains, right? Now, even when the index is rise like yesterday, individual stocks gains are limited in Malaysia. And when the index falls, really all the stocks are down. So there's very few showing increase in Malaysia's stock market. And this is due to the rapid rotation of capitals in the current market. And today, funds are in banking stocks. Tomorrow, they will move to utilities. And then the day after, into construction stocks. You get the idea here. Now, with the recent reduced profit-making effects, we are reducing and buffering the risk into a single market decline. How? By investing across three markets, like right now, SSE, US stocks market, Malaysia stocks market, right? And additionally, we also use dark pool trading to lower our costs. So despite the SSE index not rising today, the SSE index doesn't rise today. But as you can see, 4,000, over 4,000 stocks saw gains, right? With the number of gaining stocks more than the numbers of losing lands. This is SSE, all right? Don't get confused. This is SSE markets. All right, now, what does this indicate? It indicates that a shift in foreign capital flow. And let me ask you, why do institutions consistently profit? It is because they adapt to the market trends and then they adjust the strategy flexibility, but which is like participating in multiple markets. So whether it's like US, Europe, Japan, Malaysia, or China, or any other country, stock market, they invest based on favorable condition and enhance returns through diversified market investment. Now, do you well understand the benefits of diversified markets and multi-markets? If yes, please give me a response in the comment. All right. Give me a response before I get into the third topic. All right. Okay. Very good. I saw your responses. Now, right now we are entering our third topic, which is analyzing the Touchgo blend stocks holding, our Touchgo blend stocks holding. All right, and how to accelerating profits with multiple investment portfolio. Okay, now this week features three major transactions. Right. First thing, which is our premium trading. And then secondly, the AI trading in SSE markets. Now, thirdly, our yesterday when we talked about for today, our dual market linkage layout. All right. Okay. Now, look at this one. Premium trading has been successfully completed. So congratulations, whoever will join, all scholars who join. We have already achieved the target profits for both Shenzhen Huaxiang and also China West Construction Group. And today, you can see for this, it hits the daily limit up again. It hits the daily limit up again. And after that, when it hit the daily limit, our partner began selling off. So, as you can see, from here all the way to here, over 11 trading days, it hits the limit ups 11 times with a cumulative increase of, if you count it from all the way to there, cumulative increase of 174%. So the driving force behind this stock's performance is primarily institution funds. Understand? Now, with the demand greatly exceeding supply, institutions have been pushing the stock's price up continuously, setting limits up price, and driving the market sentiment and the capital inflow, which in turn boosts the stock's price up. Right? And also, we along with our partner institution have already achieved the pre-set target, right? And now Shenzhen Huaxiang has entering the selling phase. So as you can see, once we have entering the selling phase, it drops, right? So high net worth members have already achieved approximately 65% profit from these particular premium stocks. So holding it for total 6 days of trading days with a 65% gains, translating to if you are to an average daily, which means that average daily you are able to achieve 10.83%, right? Which is very good. And what about this? What about the China West construction? As you can see, China West Construction Group saw a 10% profit with a maximum rise today of 10%. Today before it adjusting, right? So the upcoming Federal Rate Reserve cycles and the overall low interest rates environment are easing fiscal burden and are the main reasons that for the rally in these China Western development sectors. Now, this is because I told all of you before, right? This China Western Construction Group is based on China Western development sectors. Okay. And yes, I list it down here because today one of the scholars asked why we are always able to identify the strongest stocks in SSE market. Can you explain a little bit, and can you let me know that how do you guys identify the strongest stocks in SSE market? So that's why now let me here to brief explanations with three main reasons. Okay, you guys can look at the screen and let's go through it together. First thing first, which is premium stocks capital's concentration. Now, understanding the logic, the core logic behind premium stocks, invest recognizing where the substantial upwards movement comes from, which is primarily the concentration of funds, right? And then for the second reason, which is funding logic. Let's note that within these premium stocks, we analyze the industry logics behind their strength. We have to understand them. Now, this involves in determining whether the stocks hold a top position within its industry. Like for example, our Shenzhen Faxiang, right, is linked to Huawei high silicons. And I have mentioned this to all of you, which is why it is indicating a significant collaboration with Huawei. So China West Construction Group benefits from China Western developments, as I have just mentioned to all of you. And because of this, it is also backed by China State's Construction Engineering, which is the top-ranked construction group globally. Get it? Now, for the third part, which is collaborative efforts, with the foundation set by the first these two factors, right? We work together with partners to pull up the stock's price, work together with other strong institutions, right? So, without institutional support, sustained profitability would be challenging, right? As a result, you may have noticed that in our premium stocks, our premium stock strategy, none of the stocks we have recommended have resulted in losses. Am I right? And this is what we call this success is the result of these three factors. All right. Now we have a better understanding. Do you guys agree and understand this part? If yes, then give me some response. Okay, give me some response. All right, now for this one, I will previous arranged double stocks. Double stocks are now gradually sold in batches as well. So with the profit, we invest into our joint layout strategy, which is our dual market linkage layout. Now, today, we execute a dual market linkage layout across two markets, which is the SSE market with two stocks and the Malaysia market with one stocks. So given a large number of our spreaders, concentrating all the funds into a single stock would be actually not impractical, right? Now, this is the reason why we are utilizing both markets. And each stock involved in the joint venture will be bought in batches according to the members' level. Understand this part, right? Now, as previously discussed and recently studied, joint position building is a strategy where multiple institutions or funders cooperate to buy a specific stocks in phase and large quantities to establish a position, right? I have discussed this with all of you as well. And it's not about randomly buying a stock and waiting for it to rise, but rather a purposefully and organized approach to achieve our target. Understand? So let me explain a little bit more for today. Start from the initial preparation. Okay, now from the initial preparation, which means that party involved agree on corporate terms and then create a detailed plan, including the target stocks, including the timing of purchase, including the funds allocation. Now, we have complete simulation of joint market makers 1.0, joint market makers 2.0, and also 3.0, right? And from there, assessing execution and coordination capabilities. So after standardizing agreements with partners institution, we then proceed with phase buying. As that, now, for phase buying, according to the plan, each parties buy the stocks in stages and also batches to avoid significant market fluctuation. Now, our scholars also, based on your investment levels, you guys enter the market in batches as well. Now, higher levels will receive a better price and potential higher returns. And then after that, we are going to convert operations, which means that during the joint layout process, we used dark pool trading, right, to obtain a lower cost shares and then to minimize the secondary market's volatility. And at this part, timing is very important, and we operate within agreed time frames to reduce detection risk. So, dark pool trading, it will eventually help us to reduce our transaction costs and lowering holding costs, and of course, enhance the advantages in the stocks accumulation. Understand? Then after that, we are going to the phase of coordinations and locking in shares. So after the accumulation shares, parties usually work together. We will work together to manage the stock's flow and also to stabilize its price, to stabilize the stock's price. Understand? And laying the foundation of our future operations. And then, as you can see here, all right, the institutional operation process involving accumulation phase, and then after that, washing out weak hands. You're going to wash out those weaker investors. And then after that, you're going to increase turnover by transferring shares between accounts, which means left hand to right hand, like I mentioned to well. Then after that, market making. And then coming to driving up the stock's price, pulling up the price, right? Pulling up the stock's price. And we are going to sell off shares. Understand? So, following our purchases, subsequent actions such as like increasing, decreasing, or maintaining position, we were all based on the market condition and initial expectation to maximize the return. Understand? So, through the joint position building, multiple institutions can leverage our financial together, and then the information advantage as well, to gradually establish a large stocks position without causing a significant market fluctuation. This is more important. Now, this strategy not only diversify our risk, but also enhance market control through coordination operations. Understand? Okay, is this part clear? And I want to make sure that everyone is clear on this part. If yes, then give me some response. All right. Okay. And this month, additionally, I want to emphasize that the significance of this dual market linkage layout here. All right, you can have a look. Now, both in terms of profit expectation and discount levels, this layout is more substantial than previous dark pool trades, right? And the joint market makers. Now, we have invested considerable efforts to secure this dual linkage layout. All right. Now, this dual linkage layout trading shares, and the shares is relatively limited. And you have to understand this. Like, for example, if the total amount as the first SSE stocks in a joint layout is 12 million shares, which means that only 12 million shares are available, and there will be no surplus once the trading is complete. Get it? And I hope that everyone understands this point. So that's why this is why I urge everyone to be prepared and not repeatedly miss opportunities when they arise. Okay, now in this dual market linkage, the two SSE stocks are an automotive stocks and a China Western Development Concept stocks. Understand? And the favorable logic for our China Western developments was detailed in the previous two lessons. So the low cost was achieved because the stock's total market capitalization is 190.5 billion in yen. So with this kind of large market cap, a large capital is needed for its appreciation. Understand? So that's why we negotiate a very low cost with the underwriters. Now, from a global perspective, the Chinese automotive market is expected to recover strongly in 2034 with a lot of Chinese manufacturing car, right, showing significant recovery effects already. Now, over the past 2 years, China automotive export has been strong, capturing a large international market demand gap, and getting a rare development opportunities, right? Okay, and the direct return for the Malaysia stocks in dual market linkage layout is 28%, right? Belonging to the utilities sectors. So, with the Malaysia economy improving and the increased demands for electricity due to data center construction, the stocks is set for growth. Okay, so for those who interested in continuing joining our layout, which is this dual market linkage layout, please contact the assistant after the class to schedule your tomorrow trading shares. All right. And another thing that I must also stress that the stocks in our joint layout must not be disclosed. So all participants in our joint layout, both new and old scholars, have to sign a confidential agreement. All right. Our foreign institution plays a great importance and construction contract through spirits. So any knowledge of our layout by other market participants could actually affect our subsequent operation. Understand? Then you have to understand this also. We have invested significant funds into this dual market linkage layout with our partner institution. And such a large amount of capital absolutely cannot leak up our layout secret. All right? Understand? Now, I hope all scholars keep this in mind. Do you all understand? And can you guys do that? If yes, please give me some response. All right. If yes, give me some response. You could just type a yes, we do. All right. I say some of you are asking that you want to join. Few of you was asking you still want to join. Yes, you can. You just have to contact our assistant after the class to join. All right? Okay, last line. we discussed how to improve the probability of getting shares in IPO and the difference between new stock subscription and direct allocation, IPO private placement, which is IPO private placement, right? So yesterday, there was an IPO available for subscription in the Malaysia market, which is this Solar District Cooling Group Berhad, right? So this company primarily invests and provides and maintains building management system, as well as solar solution and energy saving service. So its clients includes construction company, building owners, franchise companies, all these. So the company, which is a provider of energy efficiency, building management, and solar system service. And it is set to list on its market as Bursa Malaysia on September 19. All right, as you can see here, September 19, and is expected to yield more than 80% at its listing day. After listing, all right. So this IPO, it plans to issue 118.67 million new shares at a price of 38 cents per share, and aiming to raise 45.0509 million in ringgit to expand the company business. Now, one of this 118.67 million new shares, 21.19 million shares will be offered to public. Okay, this is important. Okay, and another 21.19 million shares will be allocated to qualified directors or employees or contributors. Okay, now and the remaining 76.29 million shares will be allocated specifically to a specific investor through IPO private placements. Understand? So we have already discussed the difference between subscription and direct allocation last time. IPO subscription refers to the process where investors apply for new shares during an initial public offering through a specific procedure, right? Now, let's look at direct allocation. Direct allocation, on the other hand, refers to the company directly distributing some new shares to a specific investor, which is typically institutional investor. As then, now, IPO subscription, which is using a lottery system to determine that if an investor gets the shares or not. While for direct allocation, it doesn't use lottery. Shares are directly allocated to investors based on their qualifications and the support for the company. So with quantity and the price are usually able to negotiate between the parties. Okay, so whether in Malaysia market or even in SSE markets, new shares IPO are primarily allocated to institutional investor. And there's the difference between in US market. So while US market, actually there are no public subscription phase. The US IPO are all mainly obtained by investment bank and institution. And then with institution then distribute some of the shares to collaborating investor. Okay? Now, the allocation amounts is decided by institution. So there is no concept of subscription rates in US for the IPOs. And as you can see, recently, Malaysia IPOs, the initial days gains are typically significant. With a very, very low shares are dropping, right? Often result in a gains of more than 30% on the first day. So for this company, for the Solar District Cooling Group Berhad, I expect returns of over 80% after listing. So this expectation is based on two main reasons. Okay, let's take a look here. The two main reasons. First thing, which is the South Asia hot climates, which create a high demand for energy. And solar cooling technology can significantly save energy and indicating a substantial market demand, right? And for the second reason, now due to the high-tech nature of solar cooling system and related products, the government is actively promoting renewable energies and environmental projects such as policy support might bring more projects and subsidies, which is benefiting this company SDC business growth and leading to a higher profit margin. Understand? Okay, the subscribers who wish to receive the research report on this particular company, SDCG, okay, Solar District Cooling Group Berhad. And if you want to participate in this Solar District Cooling Group Berhad new stocks IPO, you all should contact the assistant after the class to try to secure priority based on funding and timing. All right, if you all understand this, please give me some response. Please reply with a okay. Please reply with a okay. Okay? If you understand. Okay. From here, next Monday, all right, there will be an IPO available for subscription in SSE market, which is Flarecom Microelectronics, and the stock code, which is 301600. So subscription starts on September 2nd, and the result will be announced on September 3rd. All right, and the total offerings amount, which is 17,550,000 shares. Okay, now the company operates in communication and electronic equipment manufacturing industry and focusing on the research, development, production, and sales of vehicle networking intelligence terminals and large smart modules. Understand? And also provide a software and technologies service. So now here is the main thing. The issue price is 38.84, 39.84 in CNY. We were expected post-listing increase over 200% on the opening. 200%. So on Monday, we will use a concentrated max subscription approach to allow more scholars to get the shares. Now, we also will provide a detailed explanation of the concentrated subscription timing and the additional techniques on Sunday night, on the Sunday class, all right? So Sunday class is very important. Remember to attend Sunday class. Now, after the new shares IPO are listed, you can follow our selling instructions for trading. So some new shares IPO may reach our profit target just on the first day itself. So, and then we will sell it directly for profits. It's that easy. Now, for those with potential for future gains, for those IPO that have potential for future gains, all right, we will then advise you to continue holding and wait for more upside potential to maximize your profits. All right, this part, if you understand this part, please give me some response. Okay, and another thing, you can also observe that, look at the screen here. Okay, you can also observe that new stocks IPO, this is in SSE markets. They often experience significant price increase. As you can see here, This is the first day price increase, right? You can look at here. Now, why is it often experience significant price increase? Why SSE markets, IPOs often have a significant price increase? Okay, let me tell you, it's because China IPOs reviews process is very strict. The companies must have the cumulative net profits within specific criteria over the past 3 years with a positive net profit each year. And then they only can get to go for IPO. Now, on the other hand, the performance of new stocks on their first day of trading has been warming up due to the market funds. And this year, 95 new stocks has been listed on FSE market so far. I'm saying this year only, all right? With Bell experienced a decline around 6% on their first day, and 91 seeing an increase. So among these 13 new stocks achieved a first day of over 200%. Here, I already listed now. And there are 51 stocks with a first day increase of over 100%, meaning that more than half of the new stocks double in value on the first day, right? 95 new stocks, 51 of the stocks double at least. Now, let's take a look at this example. For example, this company, Bessel and Energy, which is in power sectors, it has an highest increase. The highest increase, which is 753% on its first day. This is a first day, all right? So, which is providing over 7 times the return. So, the substantial profits potential also encourages institutional investors to participate in new stocks trading to achieve significant gains, right? Okay. All right, now we are coming to our last step, which is last night we already discussed halfway, right? So tonight we'll continue studying the peak patterns of shares, and shares is represented through the peak patterns. So by observing the distribution of shares, we can effectively assess market trends, right? And institution intention as well. We can understand institution intention. This is more important. And then after that, the support and resistance level of the stocks, we also can notice. So this helps us to gain insight into institution behavior through the distribution of shares. Understand? Okay, look at this. Last night, we have already discussed the disappearance of peaks, right? In downtrend, if the upper dense peaks have not been fully consumed and a new peaks forms at a low levels, which means that a new market trend will not emerge. Understand? Now, if the trapped shares at the high levels are not sufficiently reduced during the decline, it goes against the typical market's operation patterns, right? Now, the trapped shares will create significant selling pressure. Like here, it will create a significant selling pressure and causing each time the stock's price want to rise to the lower edge of the trapped peaks to face this selling pressure. So this heavy resistance indicates that the market may either continue to decline or shows a weak upwards momentum. Understand? Now, look at this. The practical application. First thing, downwards movement of trapped shares and reduce upwards pressure. What does this mean? This means that when the trapped shares above are sufficiently transferred downwards, then a new market trend may form. And in this case, the new trend will face minimal resistance and won't be obstructed by trap peak. Understand? Now, the second thing, the reference between peaks and during rebounds. Okay, so which means that rebounds or even consolidation can some dense peak that will later act as a resistance during the price increase. Like I mentioned, if there's a lot of dense here, a lot of contraction here, then maybe, so when it goes to that area, it will face resistance. So when you guys consider rebounds during and downward trends, it's best to refer the distance between the peaks. Understand? Now, thirdly, avoid intermediate terms position if traps shares haven't moved. Now, when a stock price is at a historical level and the historical trap shares have not moved, it's wise to avoid initiating intermediate terms position. Now, institutions typically will absorb shares when investor exit. Now, if institutions are not sufficiently absorbing shares, then a new trend will not be initiated for a long time. So, institutions may push price lower to discourage investor confidence in relief, right? And leading investors to sell off their shares at a lower price to reduce the cost. And that is what happens then. After that, the disappear of the peaks ideally should happen before a new market trend is initiated. Right? Okay, now we can see on this chart, all right, I put down the date for this particular. So when I'm pointing here, which means that this is showing where it is at this area, understand, which is on August 14. Now, you can see that the upper peak, when it is on August 14, the upper peak here has not disappeared yet. So, and there will be still have many trap shares over here when they buy at the high price, which means, and causing to continue adjustment under pressure. And then eventually, as you can see, it went down. Understand? If yes, give me some response. Then I will be going to the next part. Okay, now for this one, today we will be learning a new concept, which is continued rise with multiple peaks in an uptrend. So when a stock price indicates an upward trend after forming a low level density peak, now it may experience consolidation and forms one or more new dense peaks during the rise, right? So although the original dense peaks may decrease, but they still exist. So the consolidation during this rise is considered a washing period, a washing out process. So each dense peak will become a strong support level for the stock's pullback and wash out. Understand? Now, take a look here. For this, you have to remember, if the stock price forms one and more dense peak during an upward rise, the uptrend is likely to continue, and it is advised to buy on this and hold on to the stocks. However, if the new dense peaks increase while the original peaks rapidly decrease, consider exiting and then observe first. All right? Okay, let's take a look at here. You have to remember this, okay? The increase in new peaks and also decrease in original peaks is absolutely not relative, right? Even though the original peaks decrease, their shapes remains unchanged. The reduction is relatively to the proportions of shares at that position. All right? Now, this is where the part where it's showing at this area, okay? At this area. Now, for example, this is a sun ray. So when new dense peaks are formed and the original peaks decrease, then it indicates that institutions at the bottoms have not yet exceeded profits, which is suggesting that there is still upwards momentum. As you can see, new peaks have formed, but the below low density shares are not sold yet. So which means that they are going to push it higher still, right? But then eventually it will push down to grab more shares. All right. But Rothschild returns to single peak. After a prolonged consolidation, low-level single peaks density forms, and subsequent the stock's price falls below this single peak density, right? So during the pullbacks, there is no sign of reduction in the original dense peak, and trading volume decrease. So wash up pullbacks are usually not very large and typically less than 20%. All right. So remember this, the shares patterns is commonly methods used by major players for the short. Then through these prolonged shares washout periods, they test the washout effects to push up the stock's price, right? And push up the stock's price down before stretching it upwards. Okay, now it pushed back the stock's price right here. Okay, I will explain this in a while. So trading volume often decrease during decline. And after the washing pullback phase, the price may rise back to the original single peak density and then break through the original single peak with an increased volume. And this attracts attention and then push up with the stock price higher, which is presenting a good buying opportunities here. All right. And remember this, not all breaches of origin deaths are negative. It depends on the trading volume as well. A decline with reduced volume while the original peaks remains unchanged means that major players are not discarding their shares. So take a look at this example. This is an this is an AWC, all right? AWC. Now, it forms a single peak low density, right? At here, it forms single peak low density. This is at this part, all right, where the cursor is pointing. All right, which means it's at December 28. So after a prolonged period of consolidation, as you can see, after a prolonged period of consolidation, right? And then eventually at around February here, the stock price fell below the single peak density. And then this sharing patterns is commonly used for wash up with institution, where they test the effectiveness of the washout by pushing down the price, as well as pushing down the price at this part, right? And then observe the volume shrink during decline. Okay, now you can relate to this as well. This is a different thing. This is a reconcentration of shares after washout. So let's take a look. After forming an initial lows, then peak, a small upward trend begins. So at the top of this small trend, the initial low level dense peak still exceeds in a large amount, and the second peak forms. So when breaking through the second dense peak, it's a good time to enter. All right, now key point to see for this, the key to these shares is after an initiates concentration shares, the stock's price rises, and then the low level shares remains. So which means that this indicates a high likelihood of a second surge in the stock's price. Now, after the formation of the second share peak, the price might pull back. Now, you guys should actively follow when the price breaks through the second peak with increased volume. Understand? Then remember this, the weak concentration of shares. After the washout indicates just now is this part, right? Now, this is both AWC. This is both AWC. Okay. Remember, this is both AWC, and this part, the crucial is showing at this period. Okay. And this part, the crucial is showing at this period. Okay. Now, in this case, after the washout periods, this is a washout area, right? Then after that, the shares became dense and reconcentration against on here, which is April 2nd. Now, you can consider to enter the stocks after the breakthrough of second dense here. All right? As you can see, here has no stocks that are broken. Okay, that's it for tonight. Tonight I've already explained shares patterns and also joint layouts and the new stocks of IPOs available for subscription, right? So tomorrow we will tomorrow we will continue with this dual markets linkage layout. All right. Here, this dual market linkage layout. And also the allocation of joint layout shares will be prioritized by reservation, capitals, and timing. So scholars who want to participate should contact the assistant immediately after the class to sign up. Understand? And additionally, scholars who wish to receive the research reports on the new stocks, IPOs, you guys can contact our assistant as well. Or even you guys, if you want to receive the research reports on these three joint layout stocks, this, and this, the dual market linkage, you guys can contact the assistant to get them as well. You guys can contact to get the research reports, right? And I recommend you guys to contact them immediately after the class. So on Sunday night at 8 p.m. is a very important class, and I will be discussing the main investment themes for September and provide more insight into institution layout. All right? So you guys have to come to join our Sunday class if you want to understand the idea of how the market moves during September and the main investment theme. All right, that's it for tonight. Thank you for being such a wonderful audience. See you. Bye.